Hey, thanks for tuning in to Story Loans. We're back with our third installment of our SMB Expert Series. Today we have Adam Wasch, founding partner of the franchise firm. So we get into all things franchise on this episode, starting a franchise, franchising out your concept, M&A stuff, and we talk a lot about some of the emerging franchises and some of the things to look out for with some of those newer ones. So it's really good information. You're going to want to watch to the end. So without further ado, let's get on with the show. Adam Wasch, thanks for joining me on Story Loans here.
Thank you, Ray. Thanks for having me.
So we met for the first time kind of randomly. I didn't think I was going to make it up there, but one of these SMB events in Orlando, and I took the Bright Line. You took the Bright Line too, and that was the first time I took it to Orlando. How'd you like it?
It was great. You know, I took the route of taking a little break from the three kiddos and, you know, spent the night at a nice residence inn, and it was a great event. Had a good time, and the Bright Line was fantastic.
You can't beat it. But I ended up coming back the same day as you know. But we got a chance to catch up a little bit and talk. And wasn't that just a couple days before you started your firm?
It was around the transition time, I'll say. I don't remember exactly what day it was, but you know, we were transitioning from the big firm at the end of December, and formally launched on January 1st.
Yeah, and I hope we can get into some of that because it sounded very exciting. But before we get into what you're doing now, I just want to get a little bit more of your background.
Yeah, Adam Wasch. I've been a franchise attorney for the better part of the last 12 or so years, 15-year lawyer. Started at a big firm in Florida doing mostly commercial trademark work. Ended up leaving that firm and going out on my own, and started in the franchise arena in about late 2013. Really dove in head first. Had an IP background in trademarks, and that's a big part of franchising. But started to really dive in at that time, and went from there. Had my own firm with my partner Joe. And my partner Alan, and we grew our firm to about 6 attorneys. After a successful run, kind of got a little big for us on the boutique firm side, so I decided to find a suitor in big firms, and really got big firms interested in our practice, and ended up at a firm called Green Spoon Martyr, which is a national firm. They basically acquired our franchise practice. We integrated into their system. A little under 2 years we were there, and in January 1st, decided, me and my partners at that firm, we decided to break off and start the franchise firm.
After just 2 years, you said?
Yeah, it was a good experience. We certainly grew our practice. My partner, Evan Goldman, is a New York-based attorney. He was recruited at the firm along with me. I kind of made the introduction. And so we got a chance to work together and sort of integrate our practices. We both have about equal size practice. And so Evan and I, got the opportunity to finally work together. We've known each other for a long time. Went well. And we decided that at the end of last year that it would be a good move to, take our practice to independent firm. And we've been rocking and rolling since we started, just about a month ago.
Wow, just a month. So this is brand new stuff.
It's brand new. And, I'd be lying if I said it was easy. Based on the size of our practice, we really had to transition a lot of different clients in all stages of either their franchise journey, franchisors that have been around for a long time that we've represented through different firms. The transition, wasn't easy, but at the end of the day, we're out of it and we're rocking and rolling.
How do you sell your practice to a large company, but then leave?
So it's a little different in the legal world. They're not necessarily buying as if it's like an M&A transaction. We're not signing an asset deal or a stock deal. There's no non-competes in our world. So, we basically took our practice that we both had, Evan and I, and my partner Natalie was with me, and our partner Brett was with Evan. We basically took our practice, popped it into the big firm machine, and we're operating sort of like a small firm within a big firm, right? So we brought the franchise practice to the firm, and collectively had a good size revenue firm, I'd say probably $4 or $5 million, gross, which is, a good size for a small boutique firm. So we brought that into the big firm machine and ran the firm within the machine and then popped it out in December.
Okay, so it's not a traditional M&A type of situation, but I'm curious, were there any lessons there for people who are involved in M&A? If you're like the buyer, are there any things that a buyer should or shouldn't do to make sure that type of transition is successful?
Sure. And a traditional M&A or buy-sell deal, you definitely want a non-compete, from I think market's about 5 years, at least in my world in the franchise buy-sell arena. When legal practices merge into bigger firms, it's not really the same because there's no real valuation put on the business. It's really just taking the revenue and putting it into the big firm, and then firm owners either become a W-2 or become a equity shareholder of the big firm machine. That's generally how it works in
So it's more of a retention issue. So like what's the advice to companies that are trying to attract top talent and they want to retain that talent? Do you have any like best practices or things to avoid? Because, I know you and I know you're a talented guy, and I just think that they're probably, if they could have kept you, I don't know the whole story, but like, ideally maybe it didn't work out, but like a lot of firms want to keep high producing people generating millions of dollars for the company.
It's hard because the people moving firms left and right in the lawyer world. I would distinguish. I think the law firm, boutique, big firm, that arena is maybe a little different than, I'd say regular corporate America, where there will be non-competes. And that really, certainly would keep someone, more secure within a big firm. But because there's no non-competes, it's kind of...
Well, it sounds like my business, in SBA, because, we call them BDOs, business development officers, but they're people that go out to the market, find businesses to lend to, bring them into the bank, walk them through the process. Banks make a good amount of money off the SBA product, so bringing in millions of dollars of revenue to the place, and the BDO is kind of like that attorney, and they're not in a non-compete, and they can go to the bank down the street. So it might be more relatable than you think in different professions. Maybe not the traditional, small businesses we might be dealing with, but it's definitely interesting to me.
Yeah, and I think, as any business owner would attest to, it's hard to recruit talent and keep talent. I think that's just a general common thread amongst, my clients that, hire executives. But, if you treat people the right way and give them financial incentive to stay, they'll stay. If not, they'll leave,
Yeah, most certainly. But would you rather make a lot of money and work for someone else or make less money and work for yourself?
From a tax perspective, you can make a lot less. And if you work for yourself,
write it off.
Oh, yeah, certainly. The tax code is written to benefit, the small business owner, and in no matter what industry you're in, legal or otherwise, certainly you don't need to make as much gross to net out, the same amount.
So that's part of the equation when you're trying to make this really big decision.
It was for me.
Interesting. It's a good point. When you're thinking of doing something this big, going out on your own with you and just one partner, you said?
We've got 3 partners, 7 total attorneys now.
Wow. So that and everyone came from the one place?
6 came from the one place. We added TikTok sensation Matt Margolis, who
TikTok sensation,
also on the Twitter X does a nice job of memes, but he's a great attorney.
That's the future, I guess.
That's the future. He was in legal tech for a little while and serving as general counsel, and he just joined to help us with our general non-franchise work and some disputes that we had.
So tell me about the firm, like what it's doing, and what are the different arms of businesses it has?
So, we are the franchise firm, so our focus is 100% franchise. We are...
Is it the franchise firm or the franchise firm?
Well, it's without infringing on Ohio State's trademark, it is the franchise firm. We basically can handle anything related to franchising. We've got different facets of our business. The primary core is startup franchising, which is taking a business that is interested in expanding through the franchise model and doing the legal work to do that. We work with some great franchise consultants out there that also serve a complementary purpose to us. But we also handle businesses that come to us directly and launch those brands. We represent close to 100 emerging franchisors, and I'd put that category as like 0 to 100 units. And including ones we've launched, in the past. And that is a core part of our practice. We are on the phone daily with our clients, helping them grow their systems, make sure they're keeping compliant, and helping them with any issues with franchisees. A big part of my practice is M&A work. I help buyers and sellers of franchise units and franchise systems get those transactions accomplished. I spend a lot of my day speaking to folks that are new to franchising or looking at different franchises to invest in and helping them with due diligence. So I'm on both sides of the coin, the franchisor and the franchisee side. I think it helps me in my practice to advise both sides. I can see it from the perspective of franchisees when they're looking at brands, and that helps me advise my franchisors. Maybe, hey, when they ask, hey, why aren't we selling units? What's going on? I can say, well, listen, you've got certain things here that maybe might spook some franchisees, and it just helps both sides of the equation.
You do this nationwide?
I do. We have a nationwide practice. We've got franchise clients, from in Florida out to California, Hawaii, and everywhere in between. But it's a good benefit of being, federally regulated. It allows us to do this work for clients all over the country, making sure they're compliant with the FTC franchise rule and individual state compliance rules.
When I was starting out as an SBA lender, franchise was one of the areas I was really active in. I got out of it. I haven't done a lot of it, mainly the startup stuff, because that's kind of like one of the is bread and butter for SBA lenders for many of them. But those are so tough because you have to find the franchise, find the location, get the contractor, get it built. You're opening a year, 2 years after you kind of have that start of the search. I mean, in some respects, it's the same for some searchers looking to buy a business, but those are much larger deals often, so I was doing that 2-year thing to do a $300,000 Papa Murphy's or whatever, for spending 2 years of my life. So I got out of it and pivoted more to M&A.
Right.
But the franchise space is still, it's like, if you're looking for freedom from corporate America, that's one space a lot of people are looking at. The other being just M&A of independent businesses. Like, those are the two big ones that I'm seeing. I'm just curious, since I've been away from it so long, like, what is the state of franchising right now? Like, what's new? Just kind of give me the high level.
Yeah, I mean, I've been around franchising, for the better part of the last decade. It's always been consistent. And whenever I've thought there might be a downturn, like, March 2020, for example, we saw about 2 months worth of, a quiet period. Then as May came around in 2020, for example, that was like the hottest time. People were getting out of corporate America, realizing that their W-2s were a little bit fragile, and that at any moment they could be, downsized, and looking for options to, how do I avoid this, right? And so they look to the franchise industry to either pick up a side hustle or pick up a full-time business ownership opportunity. And from there, the trajectory has been just insane. Not only people looking to get out of corporate America, but people with small businesses looking to expand their businesses. That period of time became it was interesting to me, frankly, because I'm thinking like the world's going to end, and I've got people calling me optimistic about the expansion of their business. I mean, if you can think about that, like, and if you remember back to that time, it was just pretty remarkable to me that people were so optimistic about the trajectory, because they were getting calls of people saying, hey, I want to open your business, or, how do I do that? And so it was becoming a time where there was some financial uncertainty, but in franchising, it's always been, pretty consistent. And now we're in a very hot period. And I see that sort of as compared to other investment opportunities. We saw sort of the NFT thing come and go. We saw a lot of the, Bitcoin's still around, but the other investor, people came into our world as like NFT lawyers and then kind of realized that wasn't such a good business opportunity. And then they kind of popped out, went back to the being a business lawyer or whatever.
When I started getting hit with loan requests for, Bitcoin mining operations, I knew there was something was afoot here. With COVID, there was winners and losers, and, there's a lot of people that benefited from it. I don't know what kind of concepts were reaching out specifically, but there was some businesses were hurting more than others, and some states were hurting more than others. So it was interesting, because here in Florida, 2021, 2022 were two of the best years I've seen on tax returns ever.
For retail operations, brick and mortar, there's a big distinction between brick and mortar and service-based franchises in my world. And, for retail, they were struggling a little bit. They definitely, we were getting involved with lease abatements and loan abatements, and trying to negotiate some deferral of, rent, or, payments to the franchisor. That was, a big part of that period of time. But it also kind of birthed this, service-based franchise run that we're still on. And a lot of my day right now is spent on not only launching brands in the service space, either home or commercial services or sales-based franchises, but also fielding a ton of calls and taking on, a lot of investors looking to buy up big swaths of the country in emerging brand service-based franchises.
I was listening to a podcast on the way here of someone that bought a podcast, what was it? Acquiring Minds.
Okay.
Yeah, one of their guests bought a service-based franchise business, and he was coming on.
Can we divulge which one?
Roto-Rooter.
Okay.
And he's about 2 years into it, and it was a very positive episode.
Yeah, Roto-Rooter is great because, it's almost like entered our lexicon of vocabulary, right? If you need a plumber or something's going wrong with your septic, you're saying like, got to call a Roto-Rooter, and then you're going to look for it. The brands that are now coming online, and I tell investors quite often, or prospects, I'll say, when they are looking at a brand where that doesn't have that cachet, that name, right? You really have to look at the model, make sure that you're getting into business with, people that are familiar with franchising, have scaled a franchise, because there are emerging brands, that come online that aren't as, safe of an investment as, the Roto-Rooters of the world.
Well, as someone who financed a couple Burger M's or whatever it is, I know that firsthand.
And I was actively involved in that one. Represented a couple of franchisees that had been taken advantage of. It's probably one of the worst, financial scams in franchising in the last decade, if ever. And just to give a little context to our listeners, that brand basically was a quick service burger concept, other options, but sliders. And they sold, I would say, approximately 1,500 units and opened about 200 to 300. And at about 50,000 a pop, you can imagine the amount of money the franchisor was taking in. And before the other 1,200 got open, the franchisor basically left the country, absconded with those funds, and the rest is history.
Wow.
Eventually the FTC got involved and actually filed an action against the the brand and the owner. And one of the first active FTC actions that has been filed in a long time. That's the worst. But there are others, out there that I get a lot of calls from people who've invested a good amount of money that are in trouble, and it's unfortunately kind of consistent with certain, of those brands that I hear from and my colleagues hear from on a weekly basis.
Well, let's get into that because, that's one of my questions is emerging versus established franchise. Like the fact that you said Roto-Rooter is in our vocabulary, obviously you know what you're getting there. You also have a lot of data you can review in an FDD. How many units are open, how many closed, what the financial representations are, and you have a big pool of data to draw from versus an emerging. That to me seems like that's just, that's the sexy trend, and we don't really have that data. We're kind of just going off, it's a cool model, it's a good group. It's you're looking at that a little different. Like how does one assess what's better for them in terms of established versus emerging?
A lot of it's based on availability. For established brands, there's really the problem is you're looking at usually resales, and for a lot of established brands, they're not necessarily selling one or two. Like they're already starting to be maybe packaged up and flipped to bigger fish like private equity or franchise development companies that are looking to add to their portfolio. For the regular Joe investors, right, emerging brands is really where they usually land because there are territories available. The business system, it's not necessarily Roto-Rooter, but there's not much difference in a emerging brand company that's doing kind of a similar service, whether it's roofing, fencing, plumbing, electrical, painting. Those are all things that everyone needs, and there's franchisors in the emerging space that are offering those opportunities to, regular investors because there's territories.
How do I vet them, though, and make sure it's not one of these crazy burger schemes?
Right. I mean, that's what I do, right? I'm looking at the financials. I'm looking at the backgrounds of the people that are listed in item 2 for, who's involved. I'm telling my clients, you need to do as much due diligence as possible by calling existing franchisees that already have gone through the process, making sure that, the franchisor is supporting them and that the training is adequate for them to be able to operate whatever business it is. We're looking at the model and telling our clients to actively business model this out, using data from item 7, which gives us the initial investment, and data from item 19. Hopefully that at minimum gives us the, historical gross revenues of whatever subset of franchises or corporate locations that exist.
Yeah. And emerging, you said 0 to 100, like I've seen them with 0, right? That's
Me too.
hard to vet. 50 is even 25, at least I can have a data pool to look at. But when I get the loan request for when the FDD has 1 or 2, is really nothing you can do with that in terms of validating financial projections.
Right. I have to agree. And I think most franchise attorneys would agree that, even those of us in the startup space, what we like to see from, for our startups that we work with is either a corporate unit or multiple corporate units, maybe proving the territory in various parts of a state or, different regions, give us some validation to, draft the item 19 that gives the franchisee something to hold on to and to really understand what capability the franchise has. That said, there are some franchise owners that want a franchise that don't necessarily have that data to provide, and they sell it in other ways. They sell it, they're either have some experience growing another brand. I've got a client who, was the founder of a pretty large big box gym, and he got into the anti-aging space, and it was a kind of a crossover, right? Like the similar health and wellness. He's an expert and a good salesperson, and it's a great great model. They're starting to come online, and he's sold, close to, I think close to 100 units committed for this brand. But there are plenty of startups that come online without that data and struggle to sell. That has to be acknowledged. In your world, I imagine, just like I do, when someone comes to me saying they're going to be the first franchisee of a brand, and I don't represent that brand, I'm thinking to myself, this needs to be reviewed with scrutiny, I'll say, just to make sure the person understands what they're getting into, what the franchisor may or may not know about their own system at the time that the franchisee is looking to invest. And, what we do is we try to negotiate as much downside risk out of the agreement as possible, just in case it doesn't necessarily work or it's not necessarily what the franchisee is thinking they're signing up for.
Oh, that's interesting. You can negotiate the franchise agreement?
Yeah, we do that quite a bit. A lot of startups and emerging brands will engage with franchisees to negotiate certain terms.
Because Dunkin' Donuts is not doing that, right?
Correct. And those aren't the folks that are really coming to us. You kind of know what you're going to get with a Dunkin', right? You don't know what you're getting with Bob's Donuts, right? It's just so with let's just use Bob's Donuts as an example. It's if it's a startup or an emerging brand, we'll basically take either the parts of the agreement that aren't necessarily market for an emerging brand. Sometimes emerging brands don't really realize it, but they're using, franchise agreement forms as if they're a Dunkin', right? And there's some harsh provisions that would, whereas a Dunkin' franchisee might say, well, I know what I'm going to get. I got to sign this agreement to get a Dunkin'. I'm just going to sign it, right? Whereas in a emerging system, you don't necessarily need some of these harsh provisions. It's going to be one-sided, just the nature of the beast, but there are some provisions that I tackle quite a bit to try to minimize that downside risk.
Yeah, because selling the first 100, I'm sure, is the hardest 100 to sell.
100%. And I even say the first 5, right? The first 5, if you can get past the first 5 with the right franchisees that are, performing, making money, and doing well, the brand will start to sell itself. Those are your best salespeople.
When I've looked at loan requests on franchises that have under 20 in the latest FDD, they've erred on the side of transparency to help get us comfortable. They've even shared financials from corporate stores, things that they wouldn't just disclose in item 19 of the FDD. And then, that allows us to obviously base a decision off some actual numbers, which has been cool. So, I mean, definitely if they're willing to do that and be more transparent, it definitely helps.
Yeah. And, in my world, the rules prevent franchisors from sharing any data with franchisees outside of what's in item 19. So when I'm structuring a startup franchise, I'm using as much data as I can get my hands on and including it in the item 19 because you're going to want to use that to, try to sell the concept to an investor. If it's in there, you can use it. If it's not, you can't.
Mm-hmm. I like item 19 and 20. Those are the ones I like to go to.
Yep, I do a lot of item 20 analysis, and item 20 also gives us that chart of all the franchisees that are either in the system or have just left the system with phone numbers that hopefully are the right numbers, that would give an investor an opportunity to make some random calls to our to their existing franchisees. I'm looking a lot at items 3 and 4, and I do a deeper dive into those items to make sure that there's nothing omitted. You can't imagine the amount of things I've found on.
What's 3 and 4 again?
Litigation and bankruptcy.
Oh yeah, those are cool.
Yeah. So I mean, litigation. Obviously, there's an incentive for franchisors to either downplay existing lawsuits or to maybe omit things that are on the fringe. Same with bankruptcies, especially for maybe not necessarily the founder, but the lower level, item 2 officers and directors. And we found things left and right. And, for brands, that are coming online, you need to be very careful about that, because it sort of does give the franchisee a claim that, might compromise the integrity of the franchise agreement.
Well, it's like anything. Like, if you tell me something and tell me the story and I can understand it, I'd rather hear that than have to find out about something you didn't disclose, and now there's a character issue.
Exactly. And the advice that I give to franchisee prospects is find a franchise attorney, find someone that's experienced, that can give you some, see it through a different lens. And most prospects are seeing it through the eyes of their salesperson or the broker, and getting really jazzed up about an emerging brand. And I see it through a different lens. I want them to be excited, but I also want them to understand, exactly what they're getting into with eyes wide open. And that includes, who are they dealing with? And, I'd much rather have the information out there and be able to say, hey, listen, it's not really that big of a deal, but, the founder filed bankruptcy in 2017, take it or leave it, right? But if I do a little quick search of, the PACER system and it's not there, and I find it adds even more, credibility issues.
Yeah, absolutely. Yeah, and they also disclose, the franchisor discloses their financials as well, right?
Yeah, the franchisor's, generally going to be an LLC that was for an emerging brand that was created, in the last few years, generally.
But I mean, you can see their like P&L and balance sheet.
Well, you can see their audited financial statements of the entity itself. Usually the separation is, the franchisor may have some corporate units. They're going to have a, separate OpCo, and that would be
That's
operating
different.
units, right?
But the entity itself, if you want to just make sure they have solvency and
exactly, and that's a risk factor that some of the states require franchisors to actually put on like one of the front cover pages. I was just reviewing one of the hottest service brands, which shall remain nameless.
Ooh.
But one of the risk factors. One of the risk factors was that the financial statements show a lack of funds, and that could compromise the franchisor's ability to service and train and do what it needs to do. That's at a certain period of time over the course of a year. Obviously, we're selling units, they're taking in franchise fees. It's sort of feeding the beast itself. So that likely after a year of success, that those kinds of risk factors may be, stricken out for next year's FDD. But I look at that, there are some, I'd say, red flags there. Sometimes, especially when the brand isn't necessarily selling and you're going to be one of the first 5 franchisees, for example. I would look to maybe have an addendum that might suggest that if that does happen, right, if the franchisor does, shuts down, that the franchisee wouldn't be subject to any future tail liability or future tail non-competes, and actually include that into an addendum that would be signed at closing.
Before I forget, what does your pricing model look like? Because I've been seeing some trends in the legal space.
Yeah, so we have spent a good amount of time using different models, flat fee, hourly, retainer, and so we've seen what works and what doesn't. So in doing this, we wanted to make it as easy as possible for a franchisor to work with us. So we actually have created a menu of all the services that we do on a routine basis, which, maybe including all the state registrations, franchise closings, FDDs, master franchise FDDs, and have come up with a list of services and the flat fee that we charge to do it. We try to be market or under market. We like to have long-term relationships with our clients, and don't want to be beat out by a competitor for a couple bucks, right? So, we know the market, we know our competitors, we've priced our services accordingly, and we're definitely straying away from the nickel and diming hourly model that a lot of big firms use.
Oh, I just got hit with a bill personally from one of my personal attorneys, and I'm like, I didn't even know that was going to cost me money. I just had a quick call with you, and then I get a bill in the mail.
always stayed away from billing for phone calls, and I've had partners at big firms at my old firm that were like, that's like half your day. And it's probably true. But, the flat fee, fixed fee, it prevents the client from being nervous about calling me. I'm picking up texts, I'm picking up DMs, I'm communicating by email, by phone, all day long. If I had to put in a 0.1 or a 0.2 for a call, if I can never do that ever again in my life, I'd be very happy.
Well, aren't you in charge now? So you don't have to, right?
I don't. Yeah, and it's just the people appreciate price transparency in any industry, I would think, and certainly on the legal side, it isn't always that way. So we like to offer that to our clients.
I mean, we got a banker and a lawyer here. We're trying to make friends out there, and it's hard enough. People making too many jokes about our professions, I feel like.
That's the truth.
We're good guys, Just listen.
Easy to talk to, right?
Listen, I wanted to ask you: have you ever seen like a franchise with, a ton of franchisees, so like something more established, where they do something that pisses off a bunch of franchisees or anything like that? And does any of that ever turn legal? Like I was thinking of maybe like, hey, we're updating the brand. Everyone has to pay money to like refresh their brand, something like that.
Yeah, I mean, I was on a call today with a franchisee of multiple units of a well-known brand. The brand got rolled up or bought a couple times since the original owners, and it's owned by a well-known, I'll say, holdco of service of home and residential commercial services brand, and they're pissed off because the brand advised that on renewal they're going to change the model from flat fee royalties to percentage-based royalties. And if you can imagine, you've been around in business for 20 plus years, and generating multiple millions of dollars and paying a fixed fee every month, having that become a percentage-based at renewal is problematic for a franchisee, right? And it could be allowed by, and it is allowed by most franchise agreements. The franchise agreement in the renewal section will say you're going to be subject to signing the then current form of the franchise agreement. The original drafter of that may have had no intent to change the material structure of the deal, but when brands start to get purchased by, different outfits, they reserve that right to change the structure. So yeah, that's just one example. But there's a whole industry out there of attorneys that fight for franchisee rights, of course, and certain attorneys that will form what's called a franchisee association, and that's why those cottage industries within our industry exist. To sort of try to tip the scales a little bit into a more, at least from their perspective, a more equitable balance.
Did you ever think of opening a franchise?
All the time, especially, sitting at my W-2 for the last couple of years and seeing some of my clients, not only sell franchises, but, I've had some colleagues of mine that have gone to that other side of operating a franchise and, have done very well. We trade our time for money, and, owning a business and growing it and selling it is sort of what we dream about to to offset the monotony of our day. But have I done it yet? No, but I have certainly thought about it, and the benefit that I have of owning my own shop is the flexibility to really do whatever I want, and certainly open to opportunities. Like, would I have the bandwidth to be able to run a business? No, but I'd certainly join a team of operators that would that do that. And that's kind of how that's the more typical crossover between
investing.
Right.
Yeah.
It's like either investing time or investing money.
Yep. Exactly. No, we want you to focus on the franchise firm. You're only 1 month in, so
agree. And it's been great. I mean, it's just been the reaction from our clients was, optimism and excitement. We've really been able to attract, we attracted new clients that are coming to us, just setting up appointments to work with us. It's been really, really exciting.
Can you franchise the franchise firm?
Don't think I haven't thought about that. As franchise lawyers, you don't really think of us as being like the epicenter of the franchise universe, okay? But there are a lot of different facets of the franchise universe that are fragmented, okay? We've got, brokers, you've got developers, you've got consultants, you've got suppliers, and you've got us, the franchise attorneys. And what we are able to offer the rest of the community is we're in on the ground floor of a lot of these brands. We're, helping them doing the work that they need to do to launch. So in their formative years, we are able to, sort of steer the client in ways that would benefit their brand, whether it's, by using a certain software or, a certain payroll company or a certain salesperson to help them sell. And so, there isn't really a connector. So what we're trying to accomplish with the franchise firm, in addition to performing top-notch legal work, is connecting the community in a way that benefits not only our clients, but benefits our, our friends and colleagues in the industry that, want to make the introduction, or that would love the introduction to our clients and working together in a mutually beneficial way. So, we're basically adding to our network of franchise attorneys, a network of, suppliers or affiliates to the firm that we're going to work with and are going to be included on our website in various different arenas that aren't necessarily competitive to our referral sources, but that will benefit our clients.
That's super smart, and it's very exciting what you've got going. It's like a hub, it's a community. And
100%.
Before I let you go, I want to ask you, if you're a small business owner that is considering franchising their concept, what are the characteristics of that business that you would look for to say, yeah, that's something that is franchisable?
It's a great question. I talk to people that don't really yet know their business, meaning they think that they have a franchisable concept, but it's just not fully formed yet. And whenever I get involved with a brand where I have to actually kind of form the system, I haven't seen that as a recipe of success. What I have seen succeed are capitalized small business owners that have at minimum one unit that's been operating for longer than 12 months is like the bare minimum for my preference, right? I like multiple units. I like multiple units in different geographic markets, maybe a more metro area and a more suburban area. That's what I'm looking for. I'm also looking for financial history, something that I can tangibly put in the item 19, and just a real understanding of not only the model that is being franchised, but also, who they are going to target to be franchisees. One test case, that really I'm very proud of is a brand called Scenthound. It's a dog wellness brand. We've been working with them since they launched in 2019 and early 2020, and they really refined the model and worked so hard on the corporate structure, on the corporate units, to make sure that when a franchisee buys in and develops, that they're going to have the similar success as the corporate units. And they spent a lot of time doing it, even while we had them franchised. And it took them a little time to start rolling with sales because they were working so hard on the corporate model. But once they did, it took off, and they got their first few. It turned into 20, 50, 100. Now they have like I think 300 or so committed, and about 60 some odd units open. So, those are the kind of brands that, we know what we're looking for. We'll work with, what's the special sauce? You say that, right? Like, what's a special sauce? Sometimes people come to me and I'm like, what are you offering that's different than the other 5 known brands in this industry? Or is this industry different, right?
We're just going to sell cookies.
Right.
Well, that worked out.
It worked out for some people.
Yeah.
Yeah.
A lot of news there, huh?
But yeah, I think every franchise attorney has a cookie brand in their portfolio, and the question is, what are you doing differently that's selling, and are you making your franchisees money? Like, are they successful? And that's the rub. I like working with kind of novel concepts. People think of franchising sometimes as just like food or fast food or QSR. I like working with
like nichier.
Yeah, in industries where you're like going to be first to market at something, and like you've been very successful at this business, and it's kind of interesting and new, and maybe other people could do the same thing. I'm all in for that. We've got a new client that's into like esports. I'm like, it's a big investment. You're looking for kind of a niche. You're kind of setting up like an arena, but like it's interesting, and listen, I'm all for, if you have people that are interested in buying in, that's generally where it starts. Someone's like, they come to me, I wasn't really thinking about franchising, but I'm only operating in a certain county, and some guy down in a county, 2 counties, south of us, want to operate my business. Where do I start? And for those folks, I'm into it, because the only way to do that would be to go through me and to launch them as a franchise.
It's more natural that way. It's like a natural demand.
It is, and that's where a lot of it starts. But for the folks that are really looking to go national, I like to see the refinement, the understanding of the system, and giving me a good sense that they know that when people buy in, that they're gonna do well.
Yeah. Well, Adam, is there anything else that we didn't cover that you want to cover?
I don't think so. I appreciate the opportunity to talk with you.
Yeah, man.
I've started to learn a little bit about your world, and how your world is connected to my world,
Absolutely.
and I've got the benefit of learning the different players and the banks that are lending to franchises, and the risks, the criteria, all that stuff. So, as I go, I'm excited to learn more and hopefully work with you on a big franchise deal.
Cool, man. Well, thank you so much for stopping by the studio.
Thank you.
All right.